If you are 62 or older, stop what you are doing right now. Because there is money coming to you from Social Security this June. Real money, confirmed money, money that the Social Security Administration is sending out right now, and most people have absolutely no idea it exists. I am not talking about your regular monthly benefit. I am not talking about a small COLA adjustment. I am talking about additional payments, on top of what you normally receive, that are going out specifically in June 2026. Some of you watching this video right now are going to check your bank account after watching, and find money sitting there that you never expected. Others are going to realize they have money they are entitled to that has not been sent yet, because no one told them to ask for it. I have broken this down into 4 specific amounts. Who qualifies for each one, exactly how much, and exactly what you need to do, step by step, to make sure every single dollar reaches your bank account. Amount number 4 is the one that surprises people the most. Most seniors walk right past it. It could be the largest payment of all 4. Stay with me. This is the most important Social Security video you will watch this month. Let's get into it. Before we get into the specific amounts, let me explain why June 2026 is such a significant month for Social Security recipients. June 2026 is the convergence of 3 major events happening simultaneously in the Social Security system. Event 1, the continued rollout of the Social Security Fairness Act. Signed into law in January 2025, this is the largest Social Security legislation in over 40 years. The SSA has been processing retroactive payments and benefit recalculations throughout 2025 and 2026. Many of those payments are still being distributed right now. Event 2, the annual automatic benefit recalculation. Every June, Social Security reviews earnings records and recalculates benefits for millions of recipients. If your 2025 earnings improved your benefit calculation, that increase shows up in June 2026. Event 3, several special adjustment programs for specific groups of seniors, survivors, disabled beneficiaries, and people who had benefit reductions reversed, are being processed and paid out in the first half of 2026. Put these 3 events together and June 2026 becomes one of the most significant payment months in recent Social Security history. And yet, Social Security does not call you. They do not send a press release to your mailbox. They simply process the payment and move on. If you are not paying attention, you miss it. This channel exists to make sure you do not miss it. If you are new here, subscribe and hit the notification bell. Every single week we release information specifically designed to make sure American seniors receive every dollar they are entitled to. Let's start with amount number 1. Amount number 1, Social Security Fairness Act retroactive payments. This is the single largest source of additional Social Security money being distributed in 2026. And the one that the most seniors are still not fully aware of. Let me give you the full background so you understand exactly what happened and why this money exists. For decades, since 1977, 2 provisions of Social Security law had been quietly and significantly reducing benefits for millions of American workers. The first was called the Windfall Elimination Provision, or WEP. This rule reduced Social Security retirement benefits for workers who received pensions from jobs that did not pay into Social Security. This included many state and local government employees, teachers, police officers, firefighters, and certain federal workers. The second was called the Government Pension Offset, or GPO. This rule reduced, and in many cases eliminated entirely, Social Security spousal and survivor benefits for people who received a government pension from non-covered employment. Together, these 2 provisions affected approximately 3.2 million Americans. People who spent their careers serving their communities, teaching children, protecting neighborhoods, fighting fires, and who, as a result of rules most of them never fully understood, were receiving significantly less from Social Security than they were entitled to. On January 5, 2025, the Social Security Fairness Act was signed into law. Both provisions were eliminated entirely, immediately, with no phase-in period. And here is the amount that is now coming. The Social Security Administration began sending retroactive payments in February 2026. These payments represent the difference between what affected seniors were receiving and what they should have been receiving, going back to January 2024. The average retroactive lump sum payment has been approximately $6,710. Some seniors, particularly those who had been receiving significantly reduced spousal or survivor benefits due to GPO, received retroactive payments exceeding $20,000. Additionally, And this is the part that keeps giving. Monthly benefits for affected individuals increased permanently. The average monthly increase has been approximately $360 per month. For someone who lives another 15 years, that is an additional $64,800 over their lifetime. As of June 2026, the SSA has processed the majority of these adjustments. But a significant number of cases are still working through the system. And some cases require the beneficiary to follow up, because the SSA cannot always identify affected individuals without additional information. Are you affected? You may be affected if any of the following apply. You worked in a state or local government job at any point in your career, even if you also worked in jobs covered by Social Security. You worked as a teacher in a state where teachers do not pay into Social Security. This includes California, Colorado, Connecticut, Georgia, Illinois, Kentucky, Louisiana, Maine, Massachusetts, Missouri, Nevada, Ohio, Rhode Island, and Texas. You worked as a police officer, firefighter, or other public safety employee in a position covered by a government pension instead of Social Security. You worked as a federal employee hired before January 1, 1984, under the Civil Service Retirement System. You are the spouse of someone in any of the above categories, or the surviving spouse or surviving divorced spouse. What should you do right now, today? Step 1. Call Social Security at 1-800-772-1213. Ask specifically, was my benefit ever reduced by WEP or GPO? Has my account been recalculated under the Social Security Fairness Act? Is there a retroactive payment pending for my account? Step 2. Log into your My Social Security account at ssa.gov. Check your benefit history. If you see an increase starting in early 2026, the recalculation happened. If you do not see an increase, follow up with a phone call. Step 3. If you received a retroactive lump sum, be aware that it counts as taxable income in the year received. Work with a tax professional to understand the implications for your 2026 tax return. This is real money, confirmed money. Do not leave it unclaimed. That is amount number 1. Amount number 2, the annual benefit recalculation increase. This one surprises people every year, because most seniors, even the ones who pay close attention to their Social Security benefits, do not know this automatic process exists. Here is exactly how it works. Your Social Security retirement benefit is calculated based on your 35 highest earning years of work. Those earnings are indexed for inflation, averaged, and run through a formula to produce your monthly benefit amount. But here is the part people miss. The calculation does not stop the day you claim benefits. Every single year, every June, the Social Security Administration automatically reviews your most recent year of earnings. If those earnings are higher than one of your original 35 base years, they replace the lower year with the higher one, and recalculate your benefit upward. This is called an automatic benefit recomputation, and it happens without you doing anything. For seniors who worked any paid job in 2025, full-time, part-time, self-employed, seasonal, there is a possibility that your 2025 earnings are now improving your benefit calculation. And that improvement would show up as an increase in your June 2026 payment, and in every payment going forward. Let me give you a real example. Say your original benefit was calculated using a year in which you earned $18,000, adjusted for inflation. And in 2025, even working part-time, you earned $28,000. Social Security drops the $18,000 year and replaces it with $28,000. Your average goes up, your benefit goes up, permanently. The amounts vary significantly. For some seniors it is $10 or $20 per month. For others, particularly those who had very low earning years in their original calculation, it could be $100, $150, or more per month. And remember, these increases are permanent and compound with future COLA adjustments. What should you do? Step 1. Log into ssa.gov and access your My Social Security account. Review your earnings record. Make sure your 2025 earnings are listed correctly. Errors in the earnings record are more common than people realize, and an error means your recalculation will be based on wrong numbers. Step 2. Compare your June 2026 benefit amount to your January 2026 benefit amount. If you worked in 2025, and your June payment is higher, the recalculation happened in your favor. Step 3. If you worked in 2025 but your benefit did not increase, and you believe your 2025 earnings should have replaced a lower year, contact Social Security and specifically request a manual review of your earnings record. Step 4. If you find an error in your earnings record, file Form SSA 7008, the request for correction of earnings record. Do this as soon as possible. The earlier you correct an error, the more years of correct benefits you will receive. This increase is automatic, but verifying that it happened correctly, that requires you to pay attention. That is amount number 2. Amount number 3, survivor benefit adjustments and increases. This amount is specifically for widows, widowers, surviving divorced spouses, and their dependents, and it is one of the most consistently overlooked sources of additional Social Security income in America. Let me start with the most important thing I need you to understand about survivor benefits. If your spouse, or in some cases your ex-spouse, passed away while receiving Social Security, you may be entitled to receive their full benefit amount instead of your own. If their benefit was higher than yours, you switch to theirs. This seems straightforward, but the ways in which people miss money through survivor benefits are numerous. Reason people miss money: number 1, they do not know they qualify. To receive Social Security survivor benefits, you generally need to have been married to the deceased for at least 9 months. The surviving spouse must be at least 60 years old, or 50 if disabled. Surviving divorced spouses can qualify if the marriage lasted at least 10 years. Many people who qualify, particularly surviving divorced spouses, simply do not know this benefit exists. Reason people miss money: number 2, the Fairness Act GPO elimination. As we discussed in amount number 1, the government pension offset previously reduced survivor benefits for people who received government pensions. That reduction is now gone. This means that widows and widowers who were receiving reduced survivor benefits due to GPO, or who were receiving zero survivor benefits because GPO wiped them out entirely, are now entitled to their full survivor benefit amount. For some of these individuals, the monthly increase is in the hundreds of dollars. For others, it is the restoration of a benefit they had given up on entirely. Reason people miss money: number 3, they claimed their own benefit too early. Here is a strategy that many seniors do not know about. If you are a widow or widower, you do not have to claim both your own retirement benefit and your survivor benefit at the same time. You can claim one first, and switch to the other later if it becomes higher. For example, you are 62. Your own retirement benefit at 62 is $900 per month. Your survivor benefit based on your late spouse's record is $1,800 per month. Strategy: claim your own reduced benefit at 62. Let the survivor benefit continue to grow. Survivor benefits are not subject to delayed retirement credits, but your own retirement benefit is if you delay past full retirement age. Then switch to the survivor benefit at full retirement age, or alternatively, claim the survivor benefit early, and let your own retirement benefit grow until 70. The right strategy depends on your specific numbers, but the point is, you have options, and most people are not being told about them. What should you do? Step 1. If your spouse has passed away, call Social Security at 1-800-772-1213 and specifically ask about survivor benefits. Do not assume you are already receiving the maximum you are entitled to. Step 2. If you were previously receiving a reduced survivor benefit due to GPO, call and ask whether your benefit has been recalculated under the Fairness Act. Step 3. If you are a surviving divorced spouse and your marriage lasted at least 10 years, call and ask about your eligibility. This benefit does not affect your ex-spouse's current spouse or their benefits. Step 4. Ask a Social Security specialist to run the numbers on whether claiming your own benefit versus survivor benefit first, and switching later, makes more sense for your situation. That is amount number 3. Amount number 4, the special minimum benefit. I told you at the beginning that this was the one most seniors walk right past. And I meant it. The Social Security Special Minimum Benefit is a provision that has existed since 1972. It was designed to ensure that long-term, low-wage workers receive a minimum monthly benefit from Social Security, even if their regular benefit calculation would result in a very small amount. Here is how it works. The special minimum benefit is calculated based on the number of years of coverage, meaning years in which you had earnings above a certain minimum threshold. For 2026, that threshold is $14,805 for the year. For each year of coverage between 11 and 30 years, you receive a set dollar amount per month. The maximum special minimum benefit for someone with 30 or more years of coverage is $1,033 per month in 2026. Who is this for? This benefit is specifically designed for people who worked for many years but at low wages. Domestic workers, agricultural workers, part-time workers, people who had many years in the workforce but never earned high wages in any single year. Here's why most people miss it. Social Security automatically pays you whichever is higher, your regular benefit or the special minimum benefit. The problem is, many people who qualify for the special minimum benefit have never been told it exists. They assume their regular benefit is the only option. They do not know to ask. And here is the June 2026 relevance. The special minimum benefit increases with COLA every year. In June 2026, the recalculated amounts are being applied. And for some seniors, particularly those who had many low-wage working years, the special minimum benefit may now be higher than their regular benefit for the first time. Additionally, some seniors who were affected by WEP had their special minimum benefit calculation distorted. With WEP now eliminated, some of these individuals may see their special minimum benefit recalculated upward. What should you do? Step 1. Think about your work history. Did you work for many years, 20, 25, 30 years or more, but at wages that were not high? If yes, you may be a candidate for the special minimum benefit. Step 2. Call Social Security at 1-800-772-1213 and ask specifically. Am I receiving the special minimum benefit or my regular benefit, and which one is higher for my situation? Step 3. Log into ssa.gov and review your earnings record. Count the years in which you had earnings above the minimum threshold. If you have 30 or more such years, ask Social Security to confirm you are receiving the maximum special minimum benefit you are entitled to. This benefit exists. Millions of Americans qualify. Most of them are not receiving it, simply because they never asked. That is amount number 4. Now that we have covered all 4 amounts, let me give you a clear, step-by-step action plan to make sure you receive every dollar. Step 1. Create or log into your My Social Security account. Go to ssa.gov. Click on Sign In or Create Account. This free account gives you access to your complete earnings record, your benefit estimates at different claiming ages, and your current benefit amount. This is the foundation of everything. Step 2. Review your earnings record carefully. Look at every year. Check for missing years. Check for years where the earnings amount looks too low. Errors in the earnings record reduce your benefit. The form to correct an error is SSA 7008. Step 3. Call Social Security and ask these specific questions. Question 1. Was my benefit ever affected by WEP or GPO? Question 2. Has my account been recalculated under the Social Security Fairness Act? Question 3. Is there any retroactive payment pending for my account? Question 4. Am I receiving the special minimum benefit if applicable? Question 5. Have my 2025 earnings been applied to my benefit calculation? The Social Security Administration phone number is 1-800-772-1213. Lines are open Monday through Friday, 8 a.m. to 7 p.m. Eastern Time. Call early in the morning to avoid long wait times. Step 4. Check your June 2026 payment amount. Compare it to your January 2026 payment. If it is higher, find out why. If you believe it should be higher based on what we covered today, follow up. Step 5. File any necessary appeals or correction requests promptly. Form SSA 7008, Earnings Record Correction. Form SSA 44, Medicare IRMAA Appeal. Form SSA 561, Overpayment Appeal. Form SSA 632, Overpayment Waiver. All of these forms are available at ssa.gov. Step 6. Consider working with a Social Security benefits specialist, not a general financial advisor. A specialist who focuses specifically on Social Security optimization. Many offer free initial consultations. For complex situations, particularly involving survivor benefits, government pension offsets, or the Fairness Act, professional guidance can result in thousands of additional dollars. That is your action plan. Before we wrap up, 3 critical mistakes that are costing seniors money right now. Mistake 1. Assuming everything was handled automatically. The Social Security Fairness Act adjustments were supposed to be processed automatically. But the SSA is dealing with millions of cases. Some have been delayed, some have errors, some require the beneficiary to provide additional information. Do not assume your account was handled correctly. Verify it. Mistake 2. Not reporting changes in your situation. Social Security benefits can be affected by many life changes: remarriage, divorce, a spouse's death, a change in your work status, moving to or from a state with different tax rules. If your situation changed in 2025 or 2026, and you did not report it to Social Security, your benefit may be wrong. Call and update your record. Mistake 3. Ignoring letters from Social Security. Every letter from the Social Security Administration contains important information: benefit changes, overpayment notices, requests for information. If you ignore a letter, you may miss a deadline. You may lose a right to appeal. You may lose money. Read every letter. If you do not understand it, call 1-800-772-1213 and ask for an explanation. These mistakes are costing American seniors real money every single day. That is the mistakes section. Let's bring it all together. 4 amounts coming to seniors 62 and older in June 2026. Amount 1, Fairness Act retroactive payments. Average $6,710 lump sum. Average $360 per month increase. If you worked in public service, call Social Security today. Amount 2, Annual benefit recalculation. If you worked in 2025, your June 2026 benefit may be permanently higher. Check your SSA.gov account and verify your earnings record. Amount 3, Survivor benefit adjustments. If your spouse passed away, you may be entitled to their full benefit. If GPO previously reduced your survivor benefit, it is now gone. Call and verify. Amount 4, Special minimum benefit. If you worked many years at low wages, you may qualify for a higher minimum benefit that most seniors never claim. Ask Social Security specifically about this. Your action plan, 6 steps. Log into SSA.gov. Review your earnings record. Call 1-800-772-1213 with the specific questions we outlined. Check your June 2026 payment. File any corrections needed. Consider a Social Security specialist for complex situations. If this video helped you, please share it with every senior you know. This information could change their financial situation. Like this video and subscribe to Senior Money Secrets. New videos every Tuesday, Friday, and Sunday, specifically designed to protect American seniors. The next video is on your screen right now. Watch it. I will see you there. Collision: this amount is coming to everyone 62, a pleasant surprise from Social Security in June 2026. Are you 62 or older? There is money coming to you from Social Security this June, and most Americans have no idea it exists. In this video we break down 4 confirmed amounts being sent to seniors in June 2026, who qualifies, exactly how much, and what you must do today to make sure every dollar reaches your bank account. Pushpin what this video covers. Moneybag Amount 1, Fairness Act. Retroactive payments. Average lump sum of $6,710. Some seniors received over $20,000. If you ever worked in government, education, or public safety, this money may be waiting for you right now. Moneybag Amount 2, Annual benefit recalculation. Every June, Social Security reviews your earnings and recalculates your benefit upward if your recent earnings improved your calculation. If you worked in 2025, your June 2026 payment may already be higher. Moneybag Amount 3, Survivor benefit adjustments. Widows, widowers, and surviving divorced spouses are seeing significant increases in June 2026, especially those previously affected by the government pension offset, which has now been fully eliminated. Moneybag Amount 4, the Special minimum benefit. This one has existed since 1972, and most seniors who qualify have never claimed it. If you worked many years at low wages, this benefit could be higher than your regular Social Security payment.